Mr. Rickards was the point man, and they had to cover up. Everybody in the room was sworn to secrecy. The euro would have been stillborn. The globalist narrative, which was being developed at that time. If Mr. Rickards ever wants to have an honest moment with the world, he might want to discuss this at some length, but I doubt that'll be happening anytime soon.
Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Today we have with us Rob Kirby, who is a well-known analyst on the financial markets and the editor of the Kirby Analytics newsletter. And we are delighted to have him here today in more ways than one as our guest. Good day, Rob, and welcome to SBTV. How are you doing, my friend?
I'm back. I'm back up and I'm walking, like I can walk again and I'm good. I can, I've got my mobility back. So I'm lucky and I'm happy. I'm just lucky and happy to be alive. Really, really lucky. I really dodged a bullet.
Well, we're happy for you, Rob. We just we wish you continued health, continue in getting better with it.
Yeah. Now it'd be nice to see the global financial system clean up its health, because it's not in very good health at all.
I hear you. We're definitely gonna get into that. Yeah.
The people that have performed the financial coup in America have also performed a coup in the mainstream media, and the mainstream media basically only produces a corporate. I'm going to call it a corporate monolithic narrative that supports the perpetrators of the financial coup. Like, America is a captured state, and unfortunately most people can't accept the notion that America is a captured state, and that's why people have such a hard time understanding the state of our financial morass that we're in currently globally.
Yeah.
And I mean, it's unbelievable. And in saying that, I'm not taking pot shots at Donald Trump. I don't blame Trump for the situation that exists in America at all. Trump has been parachuted into the wheelhouse of the Titanic. That's the way I view his presidency. Trump had no idea I honestly believe Trump had no idea what he was getting himself into when he ran for president.
Yeah.
He was an outsider. He was a very successful person in business. And I'm sure once he became president or president-elect, and once they basically taught him the secret handshake, I'm sure he had a "what have I done" moment. What have I done to myself? And how in the hell am I ever going to get my country out of this mess? Because America's a mess.
Yeah, I hear you, Rob. From the outside looking in, I'm seeing people are getting pretty upset with what's going on the internet as far as freedom of speech and things like that. But I think we need to know one thing when it comes to the internet. Back in 2016, and this is a fact, President Obama gave away control of the internet to the UN. So perhaps now, because it's in UN control, maybe that's the reason why we are seeing freedom of speech, First Amendment rights, beginning to be stymied or beginning to be lessened.
Well, I mean, to me, fundamentally, it's much deeper than that. I mean, America has an official debt of what, 21 or 22 trillion dollars.
Yeah, call it 22 already. Yeah.
22. The reality is nobody knows how much money has been created. I mean, I'm a big proponent and follower of Catherine Fitz and Dr. Mark Skidmore's work. And they have identified missing money, okay? This is money that isn't counted in the monetary aggregate data as posted by the St. Louis Federal Reserve, who is the official data keeper for monetary aggregates in America. And they have identified money that's gone through the books of the U.S. military that exceeds by like a factor of 10 the annual budgets of the Department of Defense. So like over a 17-year period from 1998 to 2015, they've identified at least $21 trillion that have gone through the books of two government agencies, HUD, Housing and Urban Development, and DOD. So this money was created. This money was on the books of these two institutions, government agencies, and this money has disappeared. Okay, now this money has disappeared, I would contend. It has disappeared into dark holes, one of which is the Exchange Stabilization Fund. And that's an entity that was created in 1934. And it's subject to no oversight and operates at the discretion of the Secretary of the Treasury, which would be Mnuchin, who ultimately reports to the president.
Yeah.
But I mean, these guys, the Exchange Stabilization Fund, they don't produce any annual financials, accountable to no one, and they have a history which was laid out very, very neatly in an expose done by a chap named Eric de Carbonell at a website called marketskeptics.com. Okay. And he produced a 5-part YouTube series on the Exchange Stabilization Fund, which outlines the hijinks that this shadowy organization has been engaged in since its inception in 1934. And, you know, it only makes sense that the Exchange Stabilization Fund would be engaged in nefarious activities, because its very seeding came about as the result of the American federal government confiscating gold, as in gold coin, from the citizenry back in 1934. Yes. And when they seized the gold from the American citizens by telling them that they had to turn it in for $20 and change American. And then 6 months later, they revalued that gold up to $35 an ounce. And that created, at the time, between a $2 and $3 billion windfall for the U.S. Treasury. And that money was used to seed the Exchange Stabilization Fund. And $2 to $3 billion in 1934 that was used to seed the Exchange Stabilization Fund made it the most powerful financial institution on the planet, in terms of having more resources than the actual Treasury itself. So, you know, this thing was born out of, I'm going to say it was born out of wretchedness, and it's been performing a wretched task ever since. And its task basically is to ensure the perpetuation of the dollar as a cornerstone of this is a hideous organization. It had hideous beginnings, and it's had a very checkered and hideous history, and it's engaged in very nefarious activities. And those activities include things like propping up the U.S. government bond market, creating a maniacal bid for U.S. equities, and suppressing the price of precious metals in paper markets. I mean, it's not really a big secret to most people who have an IQ bigger than their shoe size that the price of precious metals has been criminally suppressed for a very, very, very long time. Yeah. And the only thing that people, I think, fail to really gain a good understanding of when they consider the manipulation of the precious metals that has factually occurred, is that it's a very expensive proposition to keep things priced at levels they wouldn't be in nature. And to give an analogy, if you're to take a beach ball and hold it underwater, and if you stop applying the pressure to hold the beach ball underwater, the beach ball will naturally pop to the surface and pop up. So constant pressure has to be applied to keep these very unnatural things occurring that wouldn't otherwise occur. And in a monetary sense, what's been done to the price of precious metal is the equivalent of holding the beach ball underwater. And if the pressure is let off the let's just say the suppressive pressure of the in the paper markets for precious metal, suppressing the price of precious metal, and these false markets, as I would state they are, if the pressure isn't continued, the price of metal would absolutely go ballistically up in a very, very, very short period of time. Monetary authorities know this. The central banking community knows this, and to keep the prices at these artificial prices, it requires effectively burning a great deal of fiat money. But you see, they have a lot of fiat money to burn. And the reason they have it to burn is because they've created way more fiat money than anyone understands. Because I would have it that the Exchange Stabilization Fund very likely is sitting on tens of trillions of falsely, erroneously created dollars that have been siloed. And they've been siloed. You know, silos are generally considered to be objects of their weaponry. Silos are where you put your missiles. Silos are where you conduct military operations from. Right. You launch your missiles. And in a financial sense, what's going on with the Exchange Stabilization Fund? Money has been siloed there. And I refer to it as a resource. The resource is marshaled to the forefront whenever it's required. Whether it's to create a bid for U.S. government securities when there isn't a bid at an auction, or when foreigners are dumping hideous amounts of U.S. government securities that they already own, these resources from the Exchange Stabilization Fund can be marshaled up, and they can alleviate, and they can basically create a bid out of thin air for any amount of U.S. government securities that anyone would wish to sell, because nobody can wrap their head around the number of trillions that are siloed there. So this is a reality. This is what's going on in the world, and this is what so few people in the mainstream are willing to accept. And I do believe that an awful lot of people in the financial world are very aware that this is occurring, but they don't dare speak about it. Mm. And the reason they don't dare speak about it is because these are people that are accustomed to the high life. These are people that are getting paid great amounts of money. They wear very expensive suits. They belong to very prestigious clubs. Many of them have mistresses. They have multiple homes in multiple jurisdictions. If they have families, their kids are all attending the best schools, the private schools. It's a lifestyle. And a lot of these people are absolutely blackmailed. They're blackmailed and they're captive. And they don't dare speak out or deviate from the narrative, the corporate narrative that's fed to the rest of the world, that all's well and all's well and swell in America and everything's fine and dandy. because things are not fine and dandy. So anyway, that's a bit of a blurb.
Yeah, I remember back when I was in the military, we had reports of $10,000 hammers. We had reports of $10,000 toilet seats. You know, all of these things are real. In fact, I think even when we go back to the 60s, there was even the London gold pool trying to suppress gold at being down at $35 an ounce. So it's real. It's real.
You know, Patrick, $10,000 toilet seats are as ridiculous as $15 silver. So there you go. Things haven't changed. The more things change, the more they stay the same. You got a $10,000 toilet seat and you got $15 silver. I'd say the two of them are equally ridiculous.
Yeah, I hear you. It's been about slightly over 10 years since the financial crisis of 2008. And since then, very little has changed. National debt's gone higher. Stock market's gone higher. Continues to hit record highs. Many measures of debt like student loans, auto loans, and mortgages, they're also hitting higher. Yet somehow the past 10 years of relative calm seems to have lulled many people into thinking that things are fine. Do you think the financial markets are now even more at risk and in danger of a bigger collapse back in 2008?
Well, my view of what actually occurred in 2008 might differ from what a lot of people believe occurred. I mean, a lot of people refer to the 2008 financial crisis. They refer to it as the Lehman event.
Yeah.
And I don't really view 2008 financial crisis as the Lehman event at all. I actually view it as the Bear Stearns event. And to add a little bit of color to that, what happened in 2008 was predicated by what occurred to Bear Stearns in 2007. And what happened there is the rug was pulled out on the lie and the fraud that underlied subprime mortgages. The history of Bear Stearns, in that Bear Stearns was creating subprime. They were bundling mortgages and packaging them up in subprime debt, which they were selling and packaging into hedge funds. But the whole world was doing this in terms of the investment banking community. Like Bear Stearns was a big producer of subprime mortgages, but so was Morgan Stanley, and so was Goldman Sachs, and so was Lehman Brothers, and so was really the banks were involved in it up to their necks too. But many institutions in America were creating this subprime debt.
Right.
And the real issue was if the subprime debt had been rated properly, as it should have been, as in subprime, as in junk debt, we wouldn't have had an issue. The real issue in the financial crisis is that the ratings agencies rated subprime debt, which was really junk. They rated it as AAA, and that undermined the credit markets and basically destroyed global faith in our credit markets, because in 2008, it was actually 2007 when it really occurred, and that's when Bear Stearns blew up. And Bear was chosen to be the fall guy for the misappropriating of AAA, the AAA moniker to garbage debt. And the reason Bear Stearns was chosen to be the fall guy is because Bear Stearns didn't play the team game back in 1998 when long-term capital failed. When long-term capital failed, the mechanics behind that failure involved gold. okay? Because one of the big investors in long-term capital was Italy, as in the Bank of Italy, as in the Italian sovereign government. And what had happened in 1998, the Italians, with Mario Draghi as their finance minister, the Italians were in a very tough financial position, having their sovereign finances qualify for their inclusion in the euro under conditions laid down under the Maastricht Treaty, which was the master financial piece of legislation that countries that were going to join the euro had to conform to the guidelines in this treaty. And Italy was not qualifying. And one of the big things that was causing the Italians not to qualify was their gold holdings. America carries all the gold that they claim to have. They carry it on their books at like 20 or 35 bucks an ounce at a very low price. The Italians marked theirs to market, and in the 90s, the price of gold was going down. And this was sullying the Italian sovereign financial picture, and it was creating hardships for them to meet the hurdle of the Maastricht Treaty guidelines. So Mr. Draghi, as the finance minister of Italy, he had financial advisors, namely Goldman Sachs. And Goldman Sachs' financial advisor said to Mr. Draghi, well, you know, you've got this asset that's harming you and dulling your prospects to be included in the euro. Why don't we take some of this dead asset to gold, and why don't we lease some of that gold and invest the proceeds with a can't-miss group of guys at long-term capital? Because these guys have never lost money, and basically it's a guaranteed return. And this will improve your sovereign finances, and it might get you over the hump to have you included in the euro. So what actually happened? Italy leased gold, and when gold is leased from central banks, the physical bullion is sold into the market to raise proceeds, which are then used for whatever the pet project of the day is. And in the case of Italy, the gold was leased/sold into the market, and the proceeds were invested with long-term capital. And then long-term capital made a huge bet on Russian government bonds. The Russian government defaulted on those bonds, and now the Bank of Italy was out the gold, and they didn't have the money. So they were screwed, and they were screwed by their friends, but they were screwed by their finance minister, Mr. Draghi, and they were equally screwed by Goldman Sachs, who gave the advice. Draghi's silence was purchased by Goldman Sachs because they made him the chairman of Goldman Sachs International, a very cushy job that paid a lot of money. And then there had to be a secret workout. And the secret workout of Goldman Sachs, of long-term capital, was conducted in the offices of the New York Federal Reserve, where a chap by the name of James Rickards served as the point man for the workout, because he was the former legal counsel of long-term capital. And Mr. Rickards was the point man and was very well aware of all the mechanics that I've just mentioned. And they had to cover up. Everybody in the room was sworn to secrecy to never, ever, ever repeat the secretive nature of the workout of this long-term capital debacle. And the reason it couldn't be publicly talked about, and the reason they didn't want anyone ever discussing the details, was because if it had become public knowledge that Italy had lost their gold and lost the money too, the euro would have been stillborn, because Italy would not have been included in the euro. And this factual detail could never be made public because it would have been the end of the euro. And that would not be consistent with the globalist narrative, which was being developed at that time. And the prospects of a united euro, a united Europe, was not going to be tolerated. And if Mr. Rickards ever wants to have an honest moment with the world, he might want to discuss this at some length, but I doubt that'll be happening anytime soon. So anyway, fast forward now to 2007. The financial system was a mess. Subprime was blowing up because AAA paper had failed. It was the first time in the history of credit markets that AAA-rated paper was failing. And it wasn't just failing at Bear Stearns. It was failing across the board because these mortgages that had been created, with ninja loans, no income, no job, these people were extended credit and were given mortgages that they had no right getting, and they couldn't service the debt. So people were failing on their mortgages wholesale. And, the powers that be decided to make Bear Stearns the poster boy for this failure because they didn't play ball back. You see, Bear Stearns, I should have added in. Bear Stearns got upset and they leaked that this whole secret of long-term capital workout, they said it had to do with Italy and gold. And for that reason, they didn't want to take a haircut. They said, why should we take a haircut when you guys have been screwing around with gold? And this is to hide losses from gold, because Bear Stearns wasn't a big gold player. They were in investment banking business, and you see their refusal to take the hit in 1998 made them the logical choice to be the poster boy for the failure of subprime years later in 2007. So Bear Stearns was taken down, and their business was basically absorbed into J.P. Morgan. And sadly, that did not let's just say end the contagion. I mean, it was like taking down Bear Stearns was really like putting a Band-Aid on an axe wound. And the financial system had a serious axe wound, and a Band-Aid wasn't going to fix it. There had to be more done. And what the failure of this AAA paper, wrongly rated AAA paper, what it did in the credit markets, it caused what was called a freeze in the asset-backed commercial paper market. And our financial system is dependent on a functioning paper market. Commercial paper is the means by which goods are financed through production to consumers. And without a functioning paper market, commercial paper market, we have no economy. Our economy absolutely stops dead still when we don't have a functioning paper market. I mean, people like me try to talk about it. This never gains traction in the mainstream, and it never will.
Rob, that's some pretty heavy stuff. But with what you just said, three things kind of stick out for me anyway. One, why are we at $15 an ounce silver? Two, why haven't we heard more about this about Mr. Rickards? And three, what does it all mean for the average Joe? How can he best protect himself with surely what looks to be coming down the road ahead?
Well, I mean, when you talk about Mr. Rickards, I mean, I've spoken about Mr. Rickards and the reality. Let's just call it. I've spoken at length many times in interviews about the reality of Rickards, if you want to call it that. I mean, Mr. Rickards is a globalist tool, and I mean, Mr. Rickards speaks very, very highly about the prospects of gold going forward. And I would only offer to you that the reason he can speak so forcefully about gold's prospects going forward is because he knows the chicanery that's occurred in the past. So, like, when I have insight into false values being assigned to something because I was there and part of the machinery that created the false value, and if you know, you don't need to be a genius to realize that when you assign a false value to something, if nature takes its course, that won't continue. So Mr. Rickards is very aware that what's been done to the price of gold. He's very aware that, you know, it's something that can't stand. So, like, I know if I push a beach ball underwater, and if people can empirically view the beach ball underwater, and if they can't see a hand holding it down, some people might believe that the beach ball lives underwater and it belongs there. But I mean, if I know that it's being forcibly held underwater, and if I know that the person holding it or the thing holding it's going to run out, it's going to get tired, and it's going to let go of it one time, then I know it's going to pop.
Yeah.
So I can go and write a book about beach balls popping out of the water. And then I'd be a savant, because this is ultimately what will happen. But it doesn't really make me a savant. It just means that I have knowledge that the rest of the people don't have. And it doesn't make me a genius. Regardless of how many books I sell, it doesn't make me a genius at all. So, that sort of answers the Rickards question, I believe.
Yes, but that $15 per ounce silver, yeah.
Silver, $15 silver.
Yes.
I'm going to explain it this way. Most of the silver that is mined in the world, it's mined most silver does not come out of primary silver mines, okay? When silver is mined, it's usually a byproduct of mining another metal. There are actually very few primary silver producing mines in the world. So what happens with silver as a byproduct, the silver is effectively used as a credit. So if I'm a gold miner and I have silver coming out of my primary gold mine, I take the value I get from my silver and I use that as a credit to lower the cost of my production of gold. So if I can produce an ounce of gold for, you know, $800 an ounce, and if I can produce, for every ounce of gold I'm producing, if I can produce, you know, 4 or 5 ounces of silver, I can actually then, with the way that with mine accounting's done, I mean, if I have 4 ounces of silver being produced for every ounce of gold, that 4 ounces of silver would be $60. I might be able, because that would be 4 times $15. I could then say that I actually, instead of producing my gold for $800 an ounce, I'd produce it for $740 an ounce when I count the credit of the silver as a credit. And so this is the nature of how silver is handled in accounting. When people are mining things like gold, zinc, copper, the silver is used as a credit to lower the cost of what the mine is set up primarily to do. Okay, so the very fact, Patrick, that there are so few primary silver producing mines should tell you that there's something wrong with the price of silver. Because why is it we can have primary zinc mines, we can have primary copper mines all over the world, but there are very, very, very few primary silver mines? And the reason, Patrick, is because silver is priced incorrectly. And it's priced incorrectly for a reason. And it's priced incorrectly because it's money. Silver is money, and it historically has always been money. And it's been It's been demonetized by central banks and by governments. But the fact of the matter is, people still refer to silver as precious metal. Silver and gold are money. And they haven't been able to, look, the reality is this. For every ounce of gold that's mined out of the Earth's crust, roughly 8 ounces of silver are mined. Silver tends to be consumed in industrial processes, like the cells that people use to create electricity from the sun, in photography, in printing, and it's also got applications in health sciences. I mean, silver has many, many, many industrial applications, and it's used in very, very small amounts in many, many, many industrial applications where it's price inelastic. Where, as in, it doesn't really matter whether silver is 15 or 30 or $50 an ounce or $100 an ounce. There will always be a very small amount of silver that will be used in a great many industrial applications because it's required. And the notion that 1 ounce of gold is produced, roughly 8 ounces of silver is produced, that would tend to have you believe, at least it has me believe, that the price of silver, it's indicated to me that nature suggests the price of silver should be 1/8 to 1/10, call it, the price of gold. And if silver was 1/8 or 1/10, let's just say 1/10. If silver was 1/10 the price of gold, silver today would be $130 US an ounce. And that's against the backdrop where I believe that the price of gold is too cheap. So if markets ever became free and weren't subject to the arbitrary pricing of the paper markets of COMEX or the LBMA, I do believe that the price of silver, or let's just put it this way, the spread between the price of silver and gold, because silver is currently priced around 1/85th, as in 1 divided by 85, the price of gold with it at its current pricing. And I look for that the day we're forced back. And once this unsustainable price of metal suppression is ended, I look for that spread to narrow. So instead of silver being priced at 1/85th the price of gold, I could see that differential narrowing to maybe easily to like 1 divided by 30, 1 divided by 20. It certainly has a long way to move. And from that standpoint, on a relative basis, I view the ownership of physical silver as actually a better investment than the ownership of physical gold. And in saying that, I believe that anybody who owns physical metal will do very well with both going forward.
Yeah, you know, that kind of lands into the last question that I had for you regarding the average Joe. He's bearing the brunt of all of these things, and what does he do? What does he need to do, considering that the banks have never been cleaned up? What does he need to do for himself, for his family?
But before we get to that, I just wanted to finish off this explanation, because we were talking about why does silver remain at $15? Well, I explained to you the nature of how silver is used in the accounting on the mining side. Okay, and you know, people like the Gold Antitrust Action Committee, GATA, Bill Murphy and Chris Powell, who do amazing work, and they state over and over again, why don't the miners get upset about the price that they're getting for their silver? Well, the reason they don't get upset about the price they're getting for their silver is as I just stated, If I'm a primary zinc mine, I want to get permitted to produce zinc. And if I'm a primary zinc mine, I want to get, typically mines are built with bank finance. And if I'm a primary zinc mine, or if I want to expand my zinc mine, I need a friendly banker to lend me money. And if I'm belly aching about the fraud in the silver market, governments are going to be less inclined to permit my project, and banks are going to be less inclined to want to finance my project if all they hear coming out of my mouth is to them garbage about silver. So you see, my silence is bought because I'm a primary zinc producer, or I'm a primary copper producer, or I'm a primary gold producer who just happens to have a bunch of silver to sell too. But you see, I just use it as a credit to lower my cost to copper, gold, or zinc. So, and I'm in the primary business of producing gold, zinc, or copper. So, it's almost inconsequential to me what the price of silver is. It doesn't matter. You see, I've basically I've thrown in the towel. I've raised the flag. I've surrendered. And basically, what the reason this continues is because too many people have surrendered. Too many people have surrendered to the systemic fraud and corruption and realize it for what it is. It's an operation by officialdom, and it's something that you have to put up with if you're going to be engaged in the trade. So that's why it remains, and to this day. And then when you mention what can somebody do to protect themselves for the calamity that's sure to come financially, well, my view, for instance, I view silver as the most underpriced asset on the planet. I believe in buying things cheap and hopefully selling them when they're more expensive. So owning silver when it's the cheapest priced asset on the planet, to me, it's like buying real estate 30 years ago. One way to go, and that's up. And, because I view the suppression in the prices of physical metal, gold and silver, I view them as unsustainable. Can't continue forever.
Rob Kirby from Kirby Analytics, you've definitely said quite a bit for a lot of us to chew on, my friend. But before we wrap up, can you let our viewers know where they can find more about you and more about your work?
Yeah, you can catch me on the web at kirbyanalytics.com. Been there a while. And, I do a fair amount of media with people like you and people that want to hear the truth.
Oh, that's what we want, Rob. We just want the truth. And no matter how much pain that might come along with it, we just want the truth, and we appreciate you giving us the truth just the way it is.
Well, I appreciate you giving me the time. And I always like to share a couple of real stories about what's really going on in our financial world, because a lot of it's hard to wrap your head around.
Please do get better, my friend, and we look forward to having you on again sometime.
Anytime, Patrick.
That was Rob Kirby, editor of Kirby Analytics. To find out more of his work, please visit kirbyanalytics.com. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content. And do also check out the SBTV podcast on iTunes and Spotify.